So my name is Alastair Unwin. I'm the Deputy Manager of the Polar Capital Technology Trust, and I'm going to take a few minutes today to give you a very brief introduction to who we are and what we do. But mostly I'm going to talk about artificial intelligence, how to think about it, and why we believe at Polar, in the tech team, that we're on the cusp of something really exciting and quite special here, something that's going to transform the economy, potentially transform society in a manner that's similar to electricity or steam power or something of that magnitude. I should mention at the outset, given events across the pond and volatility in markets at the moment, particularly in the tech sector, it's also worth reminding everyone of the benefits of diversification and of having a longer term view in the space, because there is volatility. And to that end, I'd like to focus on some of those longer term drivers. And the tech sector has been a phenomenal sector for long-term returns, and I'm very proud to say that PCT has delivered shareholders very strong returns. And I'd just like to give you a sense of why the team are so excited about what's happening in AI at the moment. So this is the team. We are one of the largest, most experienced technology teams in Europe. In fact, we have a full starting 11 here of technology specialists. And I'm going to talk to you about the Polar Capital Tech Trust, which is a FTSE 100 listed investment trust now, and on which I'm the deputy manager. And the aim in the trust is to offer investors exposure to the global technology sector. We've got a capital growth mandate, and the aim is to construct a diversified portfolio of companies offering really the best of what the sector has to offer, avoiding the legacy players, avoiding the rubbish, and finding a number of maybe smaller or higher growth or in faraway markets, names that investors may not come across themselves. So how do we do that? Well, we're growth investors, and we're looking for inflection points in the adoption of new technologies. And we invest in companies who enable and benefit from those inflections. The chart here shows an adoption curve for a new technology, sometimes called an S-curve. And on the left-hand side, you can see the hype cycle phase. And this is where venture capital typically plays. You can get very, very large rewards, but the hit rates are very, very low. This is private markets, and we don't do anything here. The bit we play in is the adoption curve in the middle. This is the early phase of a technology's adoption in public markets, and we only do public markets. And technologies here are often complicated, they're often controversial, and they can, as we're feeling at the moment, be quite volatile. We also try not to outstay our welcome, because tech companies start out as disruptors and end up as incumbents. And we don't think that value investing works in technology. We think once you are the incumbent, the target goes onto your back and the returns get much less attractive from there. And I think this approach is really informed by a couple of key observations that we've picked up over the years about the technology sector and the nature of the sector. Firstly, that it's non-linear. This is a sector that thrives on inflection points, on steep changes in the rate of change. It doesn't tend to mean revert, and that's one of the main reasons why value investing has been so challenging. We think you need a very, very healthy deal of FOMO, the fear of missing out. Not many stocks drive most of the returns, and it's absolutely vital that we have those stocks in our portfolio for our shareholders. And finally, disruption, volatility are recurrent features of the space. So you need an approach and a portfolio that is diversified, that has financially stable companies within it, and that can deal with that inherent volatility. But today, I really want to illustrate how technological progress, or particularly moments of discontinuous technological progress, can have a profound impact on the landscape. And I'm a historian by training, as is Ben, the lead manager, so we tend to fall back on historical analogies and I guess echoes of what's happened in the past. And I think one of the most interesting use cases here one of the most interesting things is if we look at the history of skyscrapers. So for all of human history, human beings have not tended to live in buildings that are much more than 4 or 5 stories tall. They were too difficult to build, they'd fall over, they'd burn down. And then something changed in the middle of the 19th century. A man called Henry Bessemer invented steel, or invented a new process for making steel. And this was the hot technology of its day. Bessemer's process basically made steel 10 times faster, eventually much cheaper and much, much quicker. And he transformed the economics of the material. And what happened was that within a couple of generations, humans went from living in buildings that were 4 or 5 stories high forever to suddenly slightly taller buildings, then much taller buildings. And within a couple of generations, we got to buildings that were 25 times taller. The landscape of New York is totally transformed. And as is the economics of land, population density, and all these things that followed on from that one big technological breakthrough. And we think that this is a good example of this discontinuous technology progress, because it shows you that nothing much changes for a long period of time. Then we get a tech breakthrough, and suddenly everything changes very, very quickly. It's very, very hard to see when you're standing there in 1885 looking at the home insurance building. It's a big building, but it doesn't look that different from the building next door. It's hard to draw the line of where the new technology is going to take you. And if you take it a stage further, it's almost impossible to see the new markets that are created by technology. And that can be things like the canned goods industry or the auto industry, or even the airline industry down the line. Huge markets are built on the back of these technological breakthroughs. We think something similar has happened in artificial intelligence. AI is not a new thing. Since at least the mid-50s, people have been working on artificial intelligence, and there wasn't much progress for many decades. You had various AI winters over that period, and it really took a massive discontinuous technology breakthrough in 2017 called the transformer model, which came out of Google. And it was basically a new model architecture that allowed models to become much bigger, to use much more compute, much more data. And they started becoming much more intelligent, much more powerful. And it's from this that we then see ChatGPT and some of the amazing AI technologies that we have around us today. The exciting thing for us, particularly in 2025, is that we are in the very, very steep part of that technology curve. I'm not going to go through all the technical details on this slide, but suffice to say is that models continue to improve, as in the outputs of them get better and better at a very, very fast rate. Because initially we had just one scaling law, which is the sense that you add more compute, you add more data, and you have larger models, and the models perform better. And we now have 2 others. We have refinements we can do to models post-training, and we have something called test time scaling, which is essentially the more a model thinks about an answer, the better the answer becomes. What this all means is that these technologies are rapidly increasing the number of economic tasks they can address. They are going to have an economic impact quite quickly. And you can see this year the release schedule and the innovation speed is frenetic. And we think that that's a really, really exciting time to be involved in the AI space as we are in the trust. The market opportunity is huge. It doesn't really matter how you cut it. As these technologies become more and more capable, they address more and more areas of work that exist today. Estimates range all over the place, but they usually start in the trillions. This is as big a market opportunity as we've ever seen in our careers. We've got a few of them listed here as examples of big markets that AI is already being applied to and will continue to be applied to. But I think that one of the concerns with AI is that we're going to see a lot of displacement of jobs. And there will be certainly some jobs which go. There will be many more, if not all, jobs that are changed by AI. But it's our belief, and the historical records firmly suggests, that we'll have many, many more jobs created. 60% of workers today are working in occupations that didn't exist in 1940. This is what technology does. It creates new opportunities, new markets, new activities, and new jobs. We think AI is going to transform the speed of knowledge creation, R&D, scientific progress. It's a really, really exciting time to be invested in the sector. We also think it might happen quite quickly. And this is something that isn't necessarily totally intuitive, because one of the pushbacks on all tech investing is overhyped in the short run, more important in the long run. But if you look at the history of technology diffusion, it's tended to get faster. And that makes complete sense as communication gets quicker, as it becomes cheaper to spread ideas and to adopt new technologies. And if we dive in even to more recent trends, we might think of an Uber as an overnight success, but that actually took 5 or 6 years to get to 100 million users. If we think of Instagram going viral, it still took nearly 3 years to get to 100 million people using it every month. ChatGPT took 2 months. This technology is spreading incredibly quickly, and newer models are spreading even faster than that. So we think this could actually happen quite fast. We also look to what we call the hyperscalers, which are the biggest companies in the world, because these are the companies who are driving this technology. They are investing hundreds of billions of dollars. And if you look at what they're doing, where they're putting their money, what they're saying, they're talking about the biggest opportunity they've ever seen, a once in a lifetime opportunity, according to Amazon, the biggest technology shift and opportunity since the internet. If we look at the number of companies in the S&P mentioning AI on their earnings calls, it's half of them now. And we think that that will continue to grow. This technology is here. The companies who know most about it are investing very, very aggressively. And we think this is a very, very exciting moment for AI. Just a brief example of a company that we've held in the trust for many years of what AI can mean as it's starting to become adopted. Axon is a company who make tasers originally, and then they've since diversified into body cameras, and they've launched an AI tool that has been a huge hit. So the product is called Draft One, and what the product does is it takes the audio feed from a police officer's camera and it automatically pre-populates the incident report, which doesn't sound like it's that big a deal, but police officers actually spend up to 40% of their time drafting these reports. And the number one reason police officers leave the force, which is one of the big challenges for police around the world, is they spend too much time on paperwork. This technology is able to do 80 to 90% of that paperwork for them, and it costs $50 a month. And we've seen huge, huge excitement and interest in it. And that's just one example of where we're seeing technology, AI adopted outside of the pure tech space. Maybe the way to think about this in the kind of highest level is that we are on a path at the moment to something called AGI, or artificial general intelligence. And what this is really a kind of AI that is able to learn and perform any cognitive task at essentially a human level, or an expert human level, which is extraordinary. This is the equivalent of intelligence on tap, in the same way that electricity brought us sort of power on tap. It's quite extraordinary. Even going back 4 or 5 years, this was something largely from sci-fi, or people would discuss this being a 2040 or a 2050 or a 2060 thing. This AGI is something that could happen quite easily within a 3 to 5 year investment timeframe, and we think that's going to have profound implications for the labour market, for the economy, and for the tech sector. And that's why you can see on the final slide, we have pivoted the PCT portfolio to really try and take advantage of AI. We look at everything through what we call an AI lens. We want to make sure that we are invested in companies who are enabling AI. That can be cloud computing companies like the big hyperscalers, that can be the semiconductor players, it can be the suppliers into those industries, and then an increasing number of AI beneficiaries like Axon, who are using AI to build new products, to become more efficient, to take on their competitors. And we're really excited about the future growth opportunities within the portfolio, looking across all those AI opportunities. So for us, this is the biggest opportunity we've seen in our careers. There will be volatility. The market is volatile at the moment. The tech sector is incumbent to that. We are diversified. We remain liquid. We have companies that are very well funded. We're not in the sort of provision of capital business. And we're very, very excited about the outlook for the portfolio from here. So with that, I'll thank you all for your time and hand back to our hosts.